listening to Beyond the Focus, the show where we break down the big ideas shaping your financial future so you can focus on what matters most. I'm Mindy McIntosh, and today we're talking and walking through a new law with a name that's, well, let's just say it stands out. The One Big Beautiful Bill. It passed this summer and brings a bunch of tax changes. So that might help you. Some could even catch you off guard. So let's talk about what this means for your plan, your retirement, and how we help clients navigate it at McIntosh and Associates. So question one, this bill has a bold name, but what should our clients actually know about it? Well, answer here that we're talking about is the One Big Beautiful Bill makes a lot of the 2017 tax laws permanent, or at least that they're saying not changing now. And it adds a new piece of impact to income taxes, deductions, estate planning, and even how your kids or grandchildren save for the future. We're paying close attention because these changes create new planning windows for the people we serve, especially those nearing or in retirement. Second question, what will change how much our clients pay year to year? So how will this change the taxes that they're actually paying? Well, will it or won't it? The question is, it might. And while tax rates stay the same, you won't see a sudden increase. The bill changed several deduction rules. We don't see the tax law sunsetting, but if you're retired or still working or receiving income from a business, these updates could shift your tax picture. And at McIntosh, we're already factoring into the years to review and take a look at tax estimates for you. So question three, what are a few highlights for our retirees or those getting close? It's always a big question. A few things really stand out here for us. If you're 65 years or older, there's a $6,000 extra deduction available through 2028. Deductions for overtime, tips, and auto loan interest might also apply if you're working part-time or still on the payroll. And if you're taking the standard deduction now, it is increasing from $31,500 for couples. That could come to ease and really help your taxable income a little bit in this year that leaves some planning room for you. These kind of updates are exactly why we review plans annually. Laws like this have to make changes to your strategies to stay current with what's here and now. Question number four, really, what is new in the SALT deduction? How does this increase and how does it come into play when we're really looking for our mid-Michigan folks? Well, this is an extremely great question that we've heard. The SALT deduction limit goes up from $10,000 to $40,000 for the next 5 years. And this mostly will help households with high property taxes or state income tax. It does open new opportunities for trust planning. So if you're helping adult children managing rental properties like we see in this area or looking at wealth transfer, this can be part of a similar and smarter structure for you. And that's where our estate and tax strategies really come into play. So we want to connect on that there. Question five, let's see, any changes to charitable giving? Well, yes, there is changes there, and it's really a mix of opportunity and caution for folks. So starting in 2026, non-itemizers can now deduct $1,000 or $2,000 jointly for charitable gifts. But there's now a 0.5% adjusted gross income or AGI floor on itemized charitable deductions, meaning that only amounts above that really are going to count. Also, itemized deductions are capped at 35%, which affects our high income givers. So planning ahead, and especially for these big gifts, is really critical in what you're looking to support. We've already had conversations with some of our clients about timing their gifts. Kind of the giving while living is our philosophy here, bundling donations or updating how they give. Question six. What should business owners or self-employed folks pay attention to? Several different things. They absolutely really need to look out for some bullet point things in this over 900-page bill. So the 20% qualified business income deduction is now permanent. And what this means, it gives you a bonus depreciation that is also permanent. You can now write off 100% of any qualifying equipment purchases in the year that you buy. And the standard section 179 of the tax law book limits jumps up to 2.5 million, helping small businesses even more. So if you're a small business owner in mid-Michigan, whether it's farming, contracting, or running a practice, well, this really helps to mean that we want to have proper setup. Question 7, there's been buzz around the Trump accounts for kids. And what really is a Trump account? Well, these are new accounts created for children born between 2025 and 2029. So each account starts with a $1,000 government contribution, and parents can add up to $5,000 annually. Funds do grow tax deferred and convert it to an IRA at age 18. So they can use that money early for college or a first home or for later in life. So if you're a grandparent and you're looking to give impact, we usually start with other financial vehicles first. So let us know if this is something that you're thinking about. We can walk through those and really help you to design that legacy strategy for these loved ones. Question 8, is this bill a good thing for people thinking about estate planning? So when we take a look at this bill, it can be. So the estate tax exemption increases from $15 million per person starting in 2026. That's a big number. And while it may not apply to everyone, it creates a huge planning opportunity for families which land closely held businesses or investment opportunities. It could really be time to give ownership, forgive private loans, or to store up a legacy plan for tax efficiency. We're really looking at how can we tax efficiently take a look at wealth and growth opportunities there to be savvy on the tax plan. Question 9, are these deadlines that clients should really keep in mind, and what is kind of the end or cutoff date? Well, there definitely are deadlines, and many of the new deductions do phase out after 2028. And some investment changes like the revised opportunity zones start in 2027. This key takeaway is don't wait. Right? Don't fail to have a plan. Just because the bill uses the word permanent does not mean that the future laws won't undo it. We will see more changes. And at McIntosh and Associates, we always build with flexibility in mind. So question 10, what is happening with opportunity zones and small business stock? So when we talk about that, both do have updates here. So there's a new opportunity zone starting in 2027 with big benefits for rural areas, up to 30% capital gain reductions, which is huge, and also qualified small business stock gains are now phased out exclusions at 50% after 3 years and 100% after 5 years. This excluded amount goes up to $15 million. So we must look at how are we looking at today and over the next course of the years. Question 11, though, what is your advice to someone feeling overwhelmed by all of this? Biggest thing here is you don't have to figure it all out alone or in one sitting or in 1 month. That's why we're here. Whether you're a client or just getting started, we're here to help you understand what this bill means for you, your lifestyle, and where you're at in your planning today. And it's not just about rules and numbers. It's about making sure that your money supports your goals, even as the world continues to change around it. And every year your strategies might change. Things change in your lifestyle as well, that we're right here to help you instrument what's the most important to you so you're not an information overload. Question 12. Now, there's so much to keep track of here. How can someone figure out which parts of this bill actually apply to them? Well, that's exactly why we're here and taking a look at creating an actual new guide called Unlock Your Tax Savings. It breaks down the key changes. Here's one of them here. Breaks down the key changes to what it will mean for you, your retirement, your estate plan, and your income strategies. You can download it now at wealthmichigan.com and start looking for real opportunities in your tax plan and an easy way for you to read and understand what might fit for you. Question 13, what's your biggest takeaway from this bill for clients? Well, I'm going to say kind of some of the biggest takeaway is planning timeframes, windows or blocks in time that we can really take a look at shifts from deductions to gifts to tax strategies. It won't last forever. And even though many are labeled permanent, I want you to realize that the tax law is like written in pencil. It's never set in stone. And now it's the time for you to review your plan, maximize the deductions while they last, and explore new saving vehicles like the Trump accounts. And if you're unsure where to begin, let's have a conversation and really talk about what approach to taxes is going to work the best for you in this big, beautiful bill. Now, I want to thank you for tuning in to Beyond the Focus. And if this bill left your head spinning or just kind of sparked some ideas on your own about planning, that's what we're here and excited about. We want to make sure we're educating you and helping you with these new ideas that have reached out within the new bill. So reach out anytime or visit wealthmichigan.com for more resources. And until next time, stay focused and keep leading with purpose.